God, today, join me, ladies and gentlemen. Put your hands together as we celebrate a phenomenal superstar, a leader per excellence, one who is ready. I call him Atomy, a bomb going somewhere to happen. No longer going somewhere to happen, has gone somewhere to happen. Put your hands together, put an emoji, put 111, put anything you think. If you were to want to be celebrated, how would you want to be celebrated? Put something on the chat for him and celebrate him. I'm just going to put some fire from love emoji for him and some celebration. Thank you, Mr. Ezekiel, for all that you do. We celebrate you. We love you. Ladies and gentlemen, the next voice you will hear will be the voice of Ezekiel. Thank you so very much, Ezekiel. Take it from me.
Hello, good morning. Good morning, Dr. Dupsy. Good morning. Thank you very much. Every superstar is connected this morning. You know, Dr. Dupsy is making me feel like a dog. Oh my
Good
God. Good
night.
morning. Thank you very much, Ma.
God bless
Uh,
you.
Thank you. Chairman, my mentor, I celebrate you. You know, I love to check in with my mentor all the time, and I don't know if he's here. Chairman Uriel, sir, please permit me to check in with you before I proceed, sir.
Yeah, good
Chairman,
morning,
sir.
Good morning, Ezekiel. How are you doing?
I'm fine, sir. I'm fine.
Yeah, so good morning, Dr. Dupe. Good morning, Dr. Love. Good morning, World Hub. I think Shapepe is still on her vacation because I can't see her here. And good morning to all the wins. I think we have had a buy trade this morning that hit TP1. We've also had a sell trade this morning that hit TP1 as well. I'm looking at the trade, but let's see how it goes. If I call it now, it will distract the learning because I've seen that when people are in the money, their mind goes off learning and they stay on the money. So what we need to learn today is really very important. So I'm going to keep eye on the trade, but let's focus on what we need to learn today. So with that being said, I want to pass it back to Ezekiel. Ezekiel is saying, let's make money. Ezekiel, all the money that you made yesterday night, you made 1,800. This morning, you made whether 800 or another 600. It never do you. What do you want to carry on doing?
Good morning, sir.
All right.
Okay. Thank you very much, sir. When there's money on the table, let's take it. All right. Welcome, everybody, on the call this morning. Don't worry, I keep the time, and I'm gonna make room so that we take those money on the table before Chairman changes his mind. All right, so good morning and welcome on the call. Ezekiel is my name, and I'll be doing my part of the SMC. SMC is not what we can actually study in a day, so the best I can do is to do my part for today within the next 30, 40 minutes allotted to me, but I like to use 30 out of it. So in case we have money to make, we can still make the money. All right, so let's go into it. It's about SMC. Antifaustine, I celebrate you. Antifaustine did some very fantastic work yesterday, and I was super excited. I was blessed from those things you did yesterday. All right, so let's dig into this as fast as we can. Okay, let me just enlarge this quickly. As we start on SMC. So the way it went yesterday, it was, it is, I want to bring in some certain things I think we should just have as fundamentals to SMC. Then before we go to other part of SMC. So I'll stop somewhere along the line, you know. So some certain things I need to bring into SMC is the concept and context. You need to understand the concept and the context of SMC. If you don't understand the concept and context of SMC, by the time we start digging deep and digging deep, like what's going to happen tomorrow and next tomorrow, that's now start, digging deep into the SMC, you find it difficult to really understand what it is. This market really needs you to have it correctly on the place of what psychology plays out and every strategy you're embarking on. So SMC, there are psychology behind SMC, and you need to unravel those psychology behind SMC. Number one key psychology behind SMC is that anytime we say SMC, we are simply referring to smart money concepts. And smart money concepts, remove the concept first and look at smart money. Who are the smart money? Smart money are simply those institutional traders, those hedge funds, those JP Morgans of this world, those BlackRock, those are the smart money, those big banks, those are the smart money, those Lord of Wall Street. Those are the smart money. I don't want to mention names of some key significant figures in the society, but you just think in that dimension, all right, and see them as smart money. So if Elon Musk is a trader, I want you to answer these questions. Will you refer to Elon Musk as smart money or not? Yes or yes? I'm watching the chat. All right, I'm taking it easy. I don't want to blow ahead today. I'm watching the chat. Okay. All right. A lot of us said yes. And that's an individual I'm mentioning. The rest of the part I'm mentioning, I'm talking about organizations. And now I mentioned an individual, and a lot of persons agree with me that he will be a smart money. All right, now let's go to Trump. If Trump should be a trader, will he be a smart money? Yes or yes? Let's get response. If you agree with me, 1. If you disagree, put 2. All right. So with the way we are laying the foundation, we are already opening our mind to the psychology behind smart money. So, and you should know that these organizations and some very ultra wealthy individual that we are mentioning right here. Let me ask a question again. Do you think these people are super smart for you to run a multi-billion dollars brand like BlackRock, all right, like hedge fund, like those Wall Street things? Do you think this, set of organizations or individuals, do you think they are very, 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 very smart? Do you feel they are very smart? Put 1 if you agree, put 2 if you disagree. Well, I'm building psychology. Don't really wait that I'll start drawing chart and all that. If you miss out the psychology, those charts, you'll just be cramming it to pass. And there's nobody marking your script here. So you mark your script yourself based on what you understand. All right, so beautiful. So when we say smart money concepts now, you are trading, you are trading against the very smart set of people, smart set of organizations that have been able to master their craft in the financial market. They've mastered their craft in the financial market. All right. There's a movie I was watching yesterday. I take out time to watch movie that relates to what I'm doing. Laura, what's that caption? G20. Please look for that movie and watch it. G20 finished me. Saw the way some crooked smart money guys were trying to play around the Bitcoin and just to make the value goes up. And in a function of 24 hours, the value was just going to. But though crooked means of making it work, all right? But there are those that does it in the right way and they can manipulate the market. So if you're in this market and you want to embark on smart money to be your winning, your winning strategy in the market, you must understand who you are trading against and who are those people. So let me go by defining smart money. Is a sophisticated trading methodology designed to track and align with the movement of large institutions or investors, revealing their footprints on the price charts. Anytime they enter the market, you feel them. There are movers and shakers. You feel them. So in terms of footprint on the chart, so institutional activities leave discernible footprint And that causes some expansion, contraction right in the market. So you look forward to those expansion and contraction right in the market because of those footprints of the smart money. And another thing we'll be looking at is whenever this happens, it causes a flip in the structural patterns of the market. So you focus on market structure, you prioritize understanding the markets, underlying the structure instead of relying on technical indicators. So we retail traders, I'm one of the retail traders, I'm not Elon Musk, a big pocket, no. So most of us that are not the big pocket are the retail traders. In a way, we rely on moving average, we rely on Asian range to make our own decision. They don't look at Asian range, moving average to take their own decision. So as far as I'm concerned, I recommend to you that those moves of the big pockets should become your indicator. So the big pockets should become your indicator. BlackRock and the rest of them, Trump, Elon Musk, those big pockets should become your indicators. What are they doing? So that's the mindset you must have on smart money. You are embarking on smart money concept. So institutional price manipulation, that is what they know how to do well. They know how to balance funds, know how to make price accumulate, know how to exhaust you, the retail traders. Want the price to go this direction, they know how to exhaust you on the market till their own moves happen. They know how to do all that. So you can always look for those moves they want to make in the market. So large institutional investors use their significant capital to influence price movement. That's what I'm saying. They know how to use their heavy pocket, big pocket to influence what is happening in the market. And how do they do this? How do they influence price movement? They do that by accumulations, by distribution, of positions. That's what they do right there. So I'm building that psychology. Have that at the back of your mind. Last time when we did trading psychology, we were talking about the holistic view of every other aspect of trading, how you should know how that plays out. So on each strategy too, you must understand the psychology behind each of those strategies. So now, if you're embarking on SMC and that is your trading strategy, one, you must know market structure. Two, you must understand the area of liquidity. All right? You must understand the area of liquidity. You must know market structure. You must understand this very, very well. You must understand imbalance in the market. You must understand the imbalance in the market. And those are what you watch out for. So now let's look at the aspect of the market structure right now. All right. So on market structure, I'm going to be talking about, directional bias in the market. So let me use this as what we are familiar with. Where's my tool right now? Coming. Sorry, hold on a sec. I didn't have that too. All right, I've seen it. So anytime you see this happening in the market, all right, you tell me, you don't get tired of this. You see it and see it. The more you see it, the more your mind recognizes it. All right. When you see this move in the market, it's telling you something. It's giving you a directional bias. It's telling you what is happening in the market. So whenever you see this on the market, what comes to your mind? What comes to your mind? All right. Market is on uptrend. Market is on downtrend. If you agree it's uptrend, put 1. If you agree it's downtrend, put 2. All right, everybody, let's go. Uptrend, downtrend. Uptrend 1, downtrend 2. Uptrend 1, downtrend 2. All right. All of us agree it is uptrend. Beautiful. Now let's go for the next part now. Let me add this to my frequently used tools. Okay, so I have it there now. So let's go for the next one. What am I talking about now? I want to bring out the concept of market structure, and from market structure, you'll be able to pick out directional bias. right? So we go again, next move. Markets did this, all right? Did this. All right. So anytime you see this in the market, what trend do you expect? Downtrend, uptrend, downtrend 2, uptrend 1. All right. When you see this move in the market, what do you expect? Downtrend, uptrend, downtrend 2, uptrend 1. Let me see that respond. Okay, 2. Right. Awesome. Awesome. So everybody responding, as you're responding, you're making impression on your mind and your mind is tracking it. I've just realized this. The more you're accumulating those informations, the best you can do for yourself is let your mind track it. So your response is making it register on your mind. And that's your bailout anytime you're in the market. So it's registering. So those of you that are not responding, no problem. It's not registering, and that's not a problem. So it will get to register at some point when you're ready. So as we have this now, so what do we have to do? Let's talk about level flipping. So on level flipping, you first of all bring out the anatomy of this trend. Bring out the anatomy of this trend. And in that wise, let me go to my text. There's my text now. I want to bring out. All right, that's it. So we have it here. We have here low, and we have here high. Let me clone this now. All right, we have here low, we have here high. I shrink this. Oh, voila. Okay, so we have here low, we have here high. So we have high. High, at the same time, I can name it higher high. All right, and I call this higher high. Save this and call it higher high. So I can clone this again. So don't be in a rush to jump past this process. All right. Don't be in a rush to jump past this process. Identify it. That way it's going to help you to be able to figure out the directional bias in the market. All right. So this one become your higher low. This becomes your higher low, HL. And I can save this as well as my HL. All right. So I have this, clone it. And where do I take it to? The next point. This becomes my higher high. And this one becomes my higher low. Okay, I have my higher high, my higher low. Clone. Higher high. This gives me higher low. You see how we are going? We are trying to figure out the direction of the market. Higher high. And then the next one, we have the higher low. And it continues like that, higher high, higher low, higher high, higher low. So when it gets to this point, once we are seeing this, we already understand that, okay, the market is on an uptrend and is going on a higher high. All right, and higher high, higher low. That gives us an idea of what is happening in the market. So at some point, you are expecting that whenever market is on a uptrend, you are expecting about 4 higher highs to 6 higher highs. If it's actually on a uptrend, 4 higher highs to 6 higher highs. I just drop an expo right now. We'll go to the market and check how many higher highs has formed already right in the market. And why is the market still being bullish the way it is bullish? Okay. So allow me to do justice to those psychological parts of, for you to be able to be taking good decision when you start your SMC. So as this is going right now, higher high, higher low, it continues that way. All right. And when we want to look at the downtrend is going to give us something like lower low, lower high. Okay. So let me move this to this side. And then, oh, okay. So I have this. Save. I call this lower low. Sufficient. Stop that. And I call this call this lower high. All right. So I can also do this now. Lower high. And I just be cloning what we have here. And we have the next one, lower high. And then we have, oh, I thought I said lower low. Okay, so we have lower low right here. Lower low. Okay, so right here, I can also be moving like that. The next one to the next low below this low will be what? Lower low or lower high. The next low below this low, which is this point right now, this very point where my cursor is it going to be lower low or lower high? I need a response on the chart. Lower low or lower high? Okay, fine, lower low, fine.
Lower
So we have lower low, just chart. So we have lower low. I'm taking my time to do that. I have structure. And the next one becomes this. We continue like that, becoming a break of structure. So at all those points, we are having higher high, we are having break of structure. Then if we bring this to the other side, the points we'll be having, it can continue, you can continue labeling that. So the lower low becomes a break of structure. The lower lows becomes a break of structure. Continue like that, break of structure. The lower lows becomes a break of structure. All right. So everyone that didn't get breakout structure, the SMC, the first time we did it, this time we are doing it, we are taking our time to make sure we figure out all the elementary parts so that as we progress tomorrow and next tomorrow, you'll be able to cope. So you see where we are having breakout structure. So what are you expecting from this market now? At this point, even if you want to trade the market trend, you expect that when market is forming a higher high, the market is on uptrend. And if you want to enter the market at this point, you can just watch out. This is our expansion. This is our contraction. This is our expansion, our contraction. Another name, impulse correction, impulse correction, impulse correction, impulse correction, and it continues like that. So when it makes this impulse, it does the correction, does the second impulse, does the correction. In as much as you are expecting that it might do like 4 of that on the average while it's on the uptrend. All right, you can actually target to enter the market when it does the correction here. And when the market, when it does break of structure here, when it does break of structure at this point, when it comes back to that break of structure, and you just, I use so enlarged. All right, coming. Okay, when it does break of structure, you come into the market and take it to the next higher low. You take your stop loss to the next higher low. All right, does it hit that break of structure? You can take your stop loss to the next higher low. And then your TP, you take it when you are expecting that it will go back to retest that higher high and go past it to form break of structure. So you can just take it to the next, and just take it down there. Oh my God. Okay, you can just bring this down. Bring it down. All right, to the next higher high you are expecting, and you can take profit from there. So while I'm pointing this place out is that all those corrections you are seeing is forming support for you. It's forming support, and those higher high you are seeing is forming resistance for you. So at the point of support, we have a lot of orders there. So one of the order is just the one I've placed now. And it's not only me that watches higher high, higher low. There are some other persons too that are watching the higher high, higher lows, so that if all you know how to do is just to follow the trend and just take profit, then smart money might deal with you at some point. They might come into the market and deal with you at some point, because they know you will definitely want to enter the market. When the market hits the break of structure, you are knowing that it's going to make a correction from there, and you enter the market for the next higher high. So smart money is waiting for you at your support to clear your stop loss. And the fact that they wait for you at your support to clear your stop loss take us to the next aspect of smart money, where smart money clears liquidity. Those stop loss you're putting around this point, this support here, and those weeks out of it becomes liquidity. And smart money will go and, they will go and lay ambush right there to clear those liquidity while they make the next move. But the move they are going to make will be, what's it now? Will not respect the next level. The next level is supposed to have another, it's supposed to come up to this level now, this higher high. All right, the next move they will make would invalidate this resistance and just move impulsively in a very irregular way, imbalanced way, ineffective way, and just jump. Boom. And whenever you see that footprint, you know smart money has entered the market. So now let's go into the chart and see how we can walk around this uptrend, these bullish moves, and figure out the footprint of smart money right here. All right. So by tomorrow, the person taking us will now also be walking around the moves of those smart money around the bullish move. Then next tomorrow, the person taking us will watch out for the moves of the smart money around the bearish, the downtrend, the bearish moves. We'll figure out. So let's go and figure out what the smart money are doing right here on the main chart. So I'm going to shrink this now. I just want to identify them. I'm not going to place trade. I want to identify them so you can relate with them very, very well. All right, let's see what they are doing right here. This can stay this way. All what we're doing, creating a background. Let's see, on 4-hour time frame, I want to figure out what is happening on 4-hour time frame. So right here on 4-hour time frame, we can see what's going on here. You see, at this point, shrink a little bit. See what smart money did at this point. Smart money did something amazing right here. See what they did here. You see, the market is forming a higher low, right? It's forming a lower low, a lower high right here. And suddenly smart money step into the market right here. They step into the market at this point. So I should label this smart money. So when smart money step into the market, they allow the market to accumulate. That's another psychology now. The first one is directional bias. So on this directional bias, we are expecting something to happen to this uptrend that will create a change of character to the downside before we know that this market has stopped going up. It's now ready to make some correction to the downside, because we've not really seen, there are just little corrections here showing us that the market is still on the uptrend. So what we're doing there, let's bring it down here and see how far that goes. So we pick our trend line, and right here where we have this spike, and then the next candle goes far above that level, this level, you can see the next candle goes above this level, and that gives us break of structure there. This gives us break of structure, just like what we're doing on the other side, gives us break of structure, break of structure. So clone this, and let's look for the next level. Look at this one too. This candle, this bullish candle has a wick that is taller than this red, right? So this one gives us another break of structure, another break of structure at this point. Let's look at the next one. The next one is right here. See this move. You can see that this one, we are not going to call this a break of structure because the red candle is taller than the green candle, a little bit taller than the green candle. So that doesn't give us, a break of structure there. So we have break of structure right here again. All right. So what this is already showing us is that the market is on uptrend. It has not given enough room for downtrend, and this is on 4 hours time frame. But should we wait until the market, there is a directional bias that the market changes, moves to the downside before we start entering the market? Not really. We can now go down to, a lower time frame to see what we can do with this market. We can't take this one. We can't take this because the bullish candle here, wick, is taller than the bearish, the bearish candle is taller than the wick of the bullish candle. So rather, our next break of structure comes here. All right. And you can see from what I've said, this has given us 1, 2, 3, 4, and, where he is showing us that the market is bullish. But there is something that happens here. There's something that happens here. When the market did a correction here, we're expecting that this red candle will come to this other side and create a change of character. When that change of character happens, that is when we have a directional bias from upside to downside. That's when we have directional bias from upside to downside. So for everybody looking to sell, your sell will make a lot of sense when it comes to this zone. Your sell will make a lot of sense when it comes to this zone. Cross this zone and give you what we call CHOCH, choke. When it gives you change of character here, break it, retest it, and then you expect that, oh, there is now directional bias. So the point I really want to make out here is for you to understand the trend, understand the directional bias, and then look out for what smart money is doing here. So you can see that from here, up here, there is an impulsive move. From here to here, there is an impulsive move. You can see. Hello?
Yeah, Ezekiel, can you hear me?
Yes, boss.
Please, maybe you should use a new chart. This the writing will not allow people to see clearly. So probably you just use a fresh chart where you don't have this write-up so that people can really see clearly and be able to follow. It's important, please. Thanks.
All right, sir. Okay, please hold on a sec. All right, so I'll just quickly take this out. Take it out. Fine. Take all this out. Hide. Oh no. Okay, so I've hidden all that now, and I suppose we are good now. I've hidden all that. So now we're expecting that when price moves to this side, let me get my pattern again. Okay, price comes this way and is doing, is moving about here. And of course, by the time it moves past the last low and come to retest it, and that is when we are expecting the market has changes direction. And we can now start looking for another direction towards the downside. All right, that's when we expect another direction towards the downside. But at this point, market is not ready to really go down. But we can still pick some trade in between this by checking out what is happening on a lower time frame, and also bring those buyers, directional buyers, into a lower time frame and see how far that is going to serve us on a lower time frame right here. So you can see that we are expecting market to the price action to come below all this week. All these weeks now forms liquidity. And smart money likes to come and take out liquidity, knowing that a lot of us, we want to put our stop loss below these lows. So they would like to take out this liquidity before the next move to the upside. But if they come here and maybe an understanding that there is no enough orders right here, then they have to give us, they will have to turn it to, create another bias in the market by allowing the market to go further down. And what makes the market goes further down is some sort of manipulation around the market. At the same time, when the market doesn't have enough order to fill its transactions, it tends to spike. All right, you can write that down somewhere. When it doesn't have enough order to fill the transaction, it tends to spike. And those spikes create imbalances in the market. And the imbalance it creates in the market is what we refer to as fair value gap. And that is where the journey of smart money now starts making sense to some persons. But there are a whole lot of other things that are involved before those move happens. So you must understand those psychology, which is what we have taken our time to talk about, directional bias. When market is doing a break of structure, giving us a certain direction, uptrend or downtrend, and when market forms a change of character, wants to start giving us another direction to the downside, and what you're looking out from there. So our moves is not this change of character, but is the footprint of smart money on this change of character towards the downside will be our move. And if they are not ready to go down, then we are not ready to go down too. So if they want to go further up, then we wait for them to go further up and take our profit from that side. All right. I hope I'm able to do justice to the directional bias in that trend. We figured out the uptrend, the downtrend, and then what another thing I think is very important here is the consolidation. Consolidation to us, we call it, what do we call it now? We call it indecision of the market. But to smart money, it is called accumulation. So now let's bring out the context of the concept of consolidation. So we've done uptrend, downtrend. When market is moving sideways, this way, this way, this way, this way, this way, this way, generically, we call it consolidation. But to smart money, it is accumulation. How is it accumulation? They are trying to exhaust you, the retail trader. That's what they are doing. All right. You're seeing all these moves now. You have come to position, expecting the market to do the next higher high, and you want to take profit on that higher high. Before you know, market now start going sideways as it's going right here on 1 hour at this point now. So you are placing you are placing a sell to the downside because it has done too much, it's been too bullish according to your analysis. You are taking a sell. Smart money is putting a buy. You put a sell. Smart money put a buy. You put a sell. Smart money put a buy. You put a sell. Smart money put a buy. You put a sell. Smart money put a buy. You put a sell. Smart money put a buy. What are they doing? They are causing accumulation, gathering enough momentum for the market to take the next moves. So right here, it helps them to be able to do what we call dollar cost average, to take the price at a certain price range. All right. So if the price range right here is 34.19, like we are seeing here, they want to continue buying at that point. They don't just do things randomly. They have a volume to fill. Maybe the volume is about 1 trillion or it's about $10 billion. All right. And that volume must stay within a price range. And that price range to those people in charge, like the likes of Einstein of Wall Street, it just need to accumulate it at 34.17. So it will make the market consolidate. To you is consolidation. To them is accumulation. So when you want to sell, they bounced it back to buy. You want to sell, they bounced it back. I don't know. Are you tracking those psychology? All right. You want to sell, they bounce it back. You want to sell, they bounced it back. You want to sell, they bounced it back, accumulating, accumulating, until the point you are exhausted as a retail trader. And then what do you see on the market? When you're exhausted, you just see the market spike. Oh, and when the market spike like that, it creates imbalance. And that imbalance, we call it fair value gap. So now let's go and spot some fair value gap in the market. So right here we have, can we see, even right here, we can see two fair value gaps right here. Fair value gap 1. So if I ask us what is fair value gap, now everybody can now answer. Is an inefficiency or imbalance in the market, or when the market doesn't have enough order, or smart money doesn't have enough order to fill its transaction, the market creates an imbalance. And of course, that should be an imbalance. When it doesn't have enough order to fill its transaction, definitely the volume will create an imbalance. And that imbalance happens this way. I've just marked it. This is fair value gap. All right. So fair value gap is now formed within 3 candles. All right. The accumulation candle and the imbalance candle. You can see that now. So at this point, we have fair value gap. At this point, we have fair value gap. 2 fair value gap here on 1 hour time frame. How is this represented on 4 hours? All right, you can see it is 1 on 4 hours. So if I want to mark it on 4 hours, I'll just come from here and come to this point. This is my 4 hours fair value gap. And let me paint this white, right? Yeah, let me paint it white. Okay. So you see, this is my 4 hours fair value gap. This is my 1 hour fair value gap. And how does that happen? That is how you identify that smart money has entered the market and you're expecting some reactions at this fair value gap. So my assignment for all of us now is to go and be figuring out those fair value gaps, because it's not every time you might have your laptop to use the FVG sessions and SMC structure and fair value gap indicators to help you to be doing these things. So your eyes must be trained and your mind must be trained enough to be able to figure them out, just like I did, without bringing in indicators. So, but if you want to bring indicators, it's not a crime, it's beautiful. You can use those indicators. And where are the indicators? Just come here. The same thing I drew up here. Let's see if indicators is going to give us same thing. All right, then that's where I'll be wrapping it up. So what you need, your decision around the fair value gap, our facilitator tomorrow, Antibola, is going to tell us your decision around the bullish fair value gap called, what's it, BISI. And then Dr. Ojo will be telling us your decision around the fair value gap on the bearish move, which we call CB. So get ready for those ones tomorrow. But I've been able to build that psychology enough. So when you see accumulation, know what is happening. Yes, the ideology is like run away from the market, but know what is happening. Let your directional bias build your decision, not fear. Not fear. Directional bias should build your decision, not fear. Then that way you understand the next move of smart money. So I want to bring in the indicators. We have a fair value gap session. All right, fair value gap session. Okay, fair value gap session. This 6.3, click on it and apply it. To apply it, you make it a favorite and then you apply. Then the next one, I would like to, okay, even without this fair value gap session, let me just, because I just want to see the fair value gap. I can use Los Aglo fair value gap. Anyone, the same thing I identify right here is being identified automatically. See it here. You can see fair value gap, and that is the imbalance in the market. Smart money doesn't have enough order to fill its transactions, and then they make the next move. And this next move, are they losing? No, they've been able to spike the price at let's say, for instance, at this 34.19 to another all-time high. So he's winning. They are still winning either which way. So is you understanding the next thing they want to do and follow them, follow the trend, follow Uno road, and use that to also enjoy as much profit as you want to enjoy. But they will first of all create an accumulation around a zone before that spike will happen. And you now see fair value gap. You think that's when you should now start paying attention. Not really. Pay attention from accumulation. And when fair value gap is generated, then your attention also, you create attention in a different way. So this next way you are creating attention now, you know there is an imbalance created. Market does not like inefficiency. Based on that, market will be dragging this. It will dragging price back to itself. Back to itself. Why is it doing that? Why is it dragging price back to itself? It's dragging price back to itself because it wants to correct that inefficiency. So based on that, market will be dragging price back to itself, back to itself. All right. So you will see. Let me just pick a trend an arrow here. Where is my arrow now? All right. So hold on.
Okay.
All right. So you see market now trying to drag the market, the inefficiency dragging the market back to itself. What's it trying to do? It wants to correct the inefficiency. And how is it going to do that? It's going to do that in this way, this manner. Let me delete this. It will do that not just at once. No, it will do that in a way. Okay, hold on. Hold on. Let me delete this. Delete this. I hope you understand those psychology we build up here. So it will do it not just immediately. It's going to do it something like this, you know, gradually forming, you know, lower lows, lower highs, gradually until it corrects that imbalance. All right. So those moves you have to take while it's trying to correct the imbalance. You will be exposed to that on the BISI tomorrow. And then the moves you should take if it is on the bearish side when it creates imbalance, you'll be exposed to those moves on the SIBI on Thursday. So I'm going to pause here. If you have questions, please ask those questions. Thank you very, 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 very much, everybody.
Oh,
right.
God. Are you still quiet? Put a fire emoji for Mr. Ezekiel. Put a fire emoji while we are preparing to bring in the chairman. This is awesome, 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 Mr. Ezekiel. Thank you. We got the house to 80 something. Thank you so very much. I will pause because we already passed the hour so that the chairman can come, unless he wants us to take Mr. PC. Your hand has been up, but let's see what the chairman has to say. Mr. Chairman Sash, can we take questions or we just go?
All right, so Ezekiel, thank you so very much. Very briefly, you need to explain BISI and CB.
Exactly.
Let people understand. You need to explain it, even though someone is taking it tomorrow. Break it down so that people can take notes and understand. Then, of course, and but let's take about 3 questions. Then you end the call. Over to you.
Thank you so very much. So if you're running away, don't run away because Mr. Ezekiel will still explain BC and CB. We have had it before, but you listen to what it means so that you come back. And the people taking, you remember the person that took, what did I call it now? Risk management, that's Antibola. And we, of course, we know Dr. OJ. They're both coming up on Thursday, Wednesday and Thursday. So come early because we won't waste this much time. And then on Friday, yours obediently, I will be taking the time on Friday. So Mr. Ezekiel, do we quickly take a question? PC, please lift your unmute yourself and take your question real quick while Mr. Ezekiel prepares to teach us again what CB, explain to us what CB and BC and CB means. Thank you.
Good morning, ma. Good morning, everybody. Thank you very much. Actually, I wanted to talk about the BSI and if you can explain. Then, secondly, the explanation he was giving. My question here is, this morning on the cell, I was a bit confused. I saw